Welcome to Tesla Daily News Podcast. I'm glad you're here. Today is Wednesday, December 17th, 2025. We're covering Tesla's latest robotaxi progress that pushed the stock near a yearly high, what it means for valuation, plus key competitive and governance headlines investors should not ignore. Story 1. Tesla says it's now testing Robotaxi with no one inside, and Wall Street reacted immediately. The hook is simple. Tesla stock jumped after Elon Musk confirmed driverless testing in Austin with no human safety operator. Here's the context. For Tesla, autonomy isn't just a feature, it's the cornerstone of the bull case that turns Tesla from an auto company into a high-margin software and services platform. The market has been looking for proof that Tesla is moving from supervised driver assist toward truly unsupervised operation. Now the details. Multiple reports cite Musk posting that testing is underway, with no occupants in the car in Austin, Texas. In the same wave of coverage, Tesla shares closed around $475, up roughly 3.5% on the day, and near the highest levels of the year. Some outlets note the move brought Tesla within about 1% of its prior record closing high from December of last year. So what's the impact for investors? This is a classic narrative-driven catalyst. The stock's reaction suggests markets are currently assigning a meaningful probability to a robotaxi commercialization path even before Tesla publishes hard metrics like safety statistics, intervention rates, or regulator-approved operating domains. That can lift the valuation multiple quickly, but it also means volatility rises if the narrative gets challenged by regulation, safety incidents, or slower than expected scaling. The takeaway: autonomy headlines are moving Tesla more than the core EV business right now. Investors should watch for evidence beyond tweets. Think local approvals, geofenced service expansion, published safety performance, and any indication of a paid service ramp. Story 2. The Cybercab timeline chatter is heating up, and it's all about whether Tesla can productize robotaxi-first hardware. Hook. Reports suggest a production-ready Cybercab concept with no steering wheel or pedals could be closer than many expected. Context first. Tesla's strategy appears to be shifting from selling autonomy as an option on consumer cars to building a purpose-built vehicle optimized for fleet economics, lower cost per mile, simpler interior, and higher utilization. Details. One of the articles claims the Cybercab is production-ready and points to a possible start of production in roughly 4 months. We do not have confirmation from Tesla filings here, but the key investment question is the same. Can Tesla manufacture a dedicated robotaxi at scale? And can software reach a reliability threshold to operate without a driver? Impact. If Tesla can align 3 things: production scale, regulatory permission, and software performance, the upside narrative becomes much more concrete. But if any one of those 3 lags, it can turn into a valuation overhang because markets are clearly pulling forward expectations. Takeaway. Treat Cybercab timing claims as directional, not definitive. The investable signal will be CAPEX signals, supplier and production confirmations, and clear service launch milestones in Austin beyond testing. Story 3. Analysts are leaning into the $3 trillion narrative, but it's not based on car margins. Hook. Some coverage points to bullish calls that Tesla could double market cap within a year, powered by autonomy and AI. Context. Tesla's vehicle business still matters. Deliveries, pricing, and gross margins remain the cash engine. But the stock is trading like a platform bet, where autonomy software, robotaxi services, and AI compute are the main valuation drivers. Details. One report highlights an argument that Tesla's market value could expand from about $1.5 trillion to $3 trillion in about a year, with price targets mentioned as high as around $600 in certain commentary. Impact. This kind of expectation can be self-reinforcing in the short term because momentum investors and thematic funds chase the autonomy story. But it also raises the bar for execution. Any disappointment in the pace of autonomy deployment can hit the multiple even if vehicle fundamentals remain stable. Takeaway. If you're investing at these valuation assumptions, you're underwriting a services and software ramp, not just incremental vehicle growth. Keep your framework clear. What portion of your target price depends on robotaxi revenue versus the core auto business? Story 4. Tesla's board compensation headlines are back, and they matter because governance affects the discount rate. Hook. Reports say Tesla directors have realized more than $3 billion in stock-based compensation gains, even without receiving new shares since 2021. Context. Tesla investors have long debated governance, board independence, executive compensation, and whether oversight is strong enough for a company taking on high-stakes autonomy and safety responsibilities. Details. The reporting claims directors accumulated over $3 billion in gains from equity awards, with some individuals' cumulative gains cited in the hundreds of millions and, in one case, approaching about $1 billion over a long period. Impact. Governance issues can become stock moving if they trigger shareholder pushback, legal action, or increased regulatory scrutiny, and they can also influence how institutions size positions. In a world where Tesla's valuation depends on trust in long-horizon execution, governance credibility matters. Takeaway: this isn't just optics. For Tesla, governance risk can translate into a higher required return from investors, which means a lower valuation multiple if confidence wobbles. Story 5. Competitive pressure is shifting, and it's not coming only from Tesla's usual US EV peers. Hook. In Hong Kong, BYD says it has surpassed Tesla in market share, signaling continued strength from China-based competitors. Context: Tesla's pricing power and growth trajectory are shaped by competition, not just on vehicles, but increasingly on technology narratives like driver assistance and cost leadership. Details: a Hong Kong report says BYD and its Denza brand have delivered more than 20,000 vehicles locally over 3 years, and claims a market share near 3 in 10, higher than Tesla's share in that market. Impact: while Hong Kong is a small market versus the US, China, and Europe, it's a useful directional data point. BYD is executing aggressively across segments and regions. For Tesla investors, the risk is that sustained competitive intensity pressures vehicle ASPs and margins, making Tesla even more dependent on autonomy and software for upside. Takeaway: the core EV battlefield remains brutal. Tesla's differentiation has to come from manufacturing efficiency, software, and charging ecosystem, not just brand. Story 6. Legacy automakers are backing away from pure EV plans, and that changes Tesla's competitive set in a surprising way. Hook. Ford is reportedly cutting multiple EV programs and taking a large charge, highlighting that some competition is retreating rather than accelerating. Context: for years, the competition is coming argument was a major Tesla bear case. But if legacy automakers slow EV investment due to demand uncertainty, cost structure issues, or policy shifts, Tesla may face less near-term pressure from US incumbents, while still facing intense pressure from Chinese makers. Details: Reuters-linked coverage says Ford will take a roughly $19.5 billion write-down and is canceling or changing several EV model plans, including moves around the electric F-Series strategy. Impact: in the US, that could reduce the pace of EV product launches that directly target Tesla's high-volume segments. But it also signals that the overall EV market may be growing more slowly than the most aggressive forecasts. Slower category growth can cap Tesla's unit growth unless Tesla expands into new price points or new geographies. Takeaway: competition retreat can be a two-edged sword. It can protect Tesla's share, but it can also confirm a softer demand environment, so watch incentives, pricing, and inventory trends. Quick recap before we go. Today's big theme is that Tesla stock is being driven by autonomy milestones and the robotaxi narrative, especially the report that testing in Austin is happening with no one inside the car. The upside case is expanding fast with cybercab talk and aggressive valuation targets, but investors should balance that against governance scrutiny and real-world competition, especially from BYD. What to watch tomorrow? Any additional confirmation on the scope of Austin testing, any hints of regulatory engagement or service expansion, and whether the stock holds these highs on follow-through volume. That's it for Tesla Daily News Podcast. If you found this useful, subscribe for daily updates and check our site and feed for the next episode tomorrow.